The following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets based upon the 240-minute interval, and I believe we've reached, again, a critical juncture. Whereas in my previous video, I had continued to hype up and harp up the 35,356 price support and resistance level in confluence of the 50% fibs retracement on the much larger picture within the weekly interval. And I remain how imperative it was for long traders to hone in on and really deflect off that key inflection point. And that the bid stepped in, ended up coming back to retest that key inflection point. Looked like we were going to have a nice whipsaw-like reaction, false bear trap based upon this primary reactionary uptrend line off the October major reactionary lows. And that has been bid significantly to the upside since that key inflection point arrival. Again, backtesting off the main component of the weekly tan-colored 50% fibs retracement level. And here we are, reflecting amongst what I would call a 240-minute interval near-term price resistance. Call it the 37,890 major reactionary high inflection point that has been heavily defended by short sellers and or bear traders. False breakout, false bear, bull trap there. And you could have especially the long traders, leverage traders, who took out the technical breakout here, could be trapped in here. This, as it remains on the 25th of November, 12 p.m. Pacific time, remains an aggressive short trade, great risk reward short trade setup to the downside as of now for a prolonged move back down to retest the 34,423 price support, and then additionally a re-challenging re-inflection point of the primary reactionary uptrend line off of the October lows. Short sellers, bear traders, they want to see a solid infused 240-minute breakdown, red candle close below that key inflection point to usher in a sell signal on a prolonged sell-off, undercutting its 200 and 240-minute moving average to go on to retest the 35,356 and then ultimately the 34,489 price support there. Again, the negative and bearish divergences have only continued to establish and grow on a much larger scale, where we had the exaggerated negative bearish divergence, which was the technical catalyst for that move down below, followed by an ever more extended inflection point, creating these negative and bearish divergences that have only grown on a much, much larger scale. These were big divergences that now just continue to construct and establish on multiple technical momentum indicators as the price action of the cryptocurrency continues to move to the upside. With the stochastics 1033 that has already basically collapsed here below the 45 threshold level, and we are trading as the price action continues to march to the upside, waning momentum indicators and a great risk reward short trade setup to the downside. Long traders, bull traders, they want to see a final 240-minute solid candle close breakout above the 37,890 price resistance to go on to re-challenge those negative and bearish divergences that were put into place on a prolonged bigger move to the upside if and when they go on to get that key inflection point taken out. As for the short trade setup, the risk reward arena lies heavily to the short side.